What's up, guys? We have been on an absolute roll lately. The exact situation that we predicted and called yesterday has once again come true. You have a first tap into the area, you have a second tap currently on the way right now, and hey, if things go as though my crystal ball is telling me, then we are going to get a change in character or just some kind of change in state of delivery on Bitcoin right here to form your bullish order block, and this is going to be the area that you're going to enter. Boom, right there, right there. This low right here is also a strong low, which is exactly the reason why I drew the second tap. You never want to be longing into a weak low, which is a low that does not sweep liquidity. In this case, you have a low that sweeps this liquidity right here and this liquidity right here, as well as the liquidity right here. So that's a really positive sign for the people that are going long. And the reason, and now let me show you a couple of bad examples of shorting into weak highs. Right here, you have one high, two high, three high. These are relatively equal highs. If you started shorting at any point here, even though things might check out, the fact that you have these relatively equal, weak highs back here means that they'll eventually get swept. And that's one of the ways that you can use to prevent yourself from getting into trades too early, or just getting into trades and then getting stopped out before the move actually happens, where, you might have predicted that, hey, price is going to go down, or like price is going to go up, but then you might go in too early, you might get stopped out before the move happens. This is one of the ways that you prevent it. And another example, both of these cases, by the way, we mentioned basically publicly saying like, hey, I would love to short right now because we have, a confirmation in the change in order flow towards the bearish direction. But the fact that you have these relatively equal highs back here, as well as here, means that they will eventually get stopped out. And so glad that we are keeping this in mind. And this will be the opposite case, where, for example, this low and this low that forms here are lows that form after sweeping liquidity right here and right here. Over here, you have 1, 2, and 3 relatively equal lows. This becomes your strong low, and this is going to be the area where you want to trade from. Now, from the last few days, what we have been looking for in terms of Bitcoin is a second broken base. So a broken base is when you have a liquidity sweep down here, and then you immediately break structure in one strong move. In this case, after you take out all of the sell stops, basically, like everyone that are going long has basically gotten stopped out, and people that are shorting, quote unquote, the breakdown here, the moment price reverses, they're going to be trapped. And that's what we want to look for. And the fact that price forms new market structure, at least on a 1 hourly chart, is a really positive sign that, hey, there are interested buyers in pushing price higher. And that's a sign that we want to look for. And in this case, the reason why we want to look for 2 broken bases in a row is because this leads to an A+ setup known as the broken base double confirmation. Double confirmation is literally, I know it sounds really fancy, but it's just a broken base happening, again, without the first broken base getting invalidated. So price actually eventually just retraced, like if I draw a fib from this low to this high right here, price eventually just retraced into the 0.705 of this initial broken base, which again, we called. We wanted to see price come in here and to sweep all of these lows before we started going long. A lot of people would have went long here, but no, we know better about how the market works. We know better about how to manipulate retail traders, and that's why we called it here. This is your range deviation, and as price breaks up, you confirm the order block and off you go. And so right now, this is your double confirmation. Now I just have to draw a fib, which, by the way, this is how I predicted that price would retrace into this area right here. It's using the fib. Go from low to high of the broken base, look for 0.705. You want to look for price to not go further below and to touch the 0.886, which is why this is going to be our stop loss right here. Like if the price were to just go below the order block, and by the way, the order block is not going to be obvious on the 1 hourly chart. Was it on the daily chart? Yeah. So it's on the daily chart. Right now, price is retracing into that daily order block. So you don't want to see price touch the 0.886. I know this looks kind of awkward because the 0.886 should really be much lower. It's because I'm on a log chart. So if I draw it like this, it's going to be more obvious. And the way that we managed to predict that price would come back to this area was also by drawing a fib. From this low to this high, we want to look for price to return to the 705, but then not to go below the 0.886, which is this blue line right here. And these are just magic numbers. Don't ask me why, but they work. And right here, this 1 hourly candle, as of the time that I'm recording this video right now, which is during the New York futures open at 10 a.m., the fact that you are getting a bullish move right now is a really positive sign. If you do get a candle close above these 2 down close candles right here, they will validate it as a potential order block. So that's going to be your setup, okay? If you're watching this right now, then that's going to be a setup. Your stop is going to be at the low, and this is going to be your order block. Now, there are 2 ways that you can enter based on an order block. The first is at the start of the order block, and the second is at 0.5, or like the mid-range of the order block. So in this case, that's going to be right there at 83,800. at least on the Binance perpetual contract chart. And the other one is going to be right at the entry of the order book, which is going to be at around 84,100. And your stop in this case is going to be right about 83,150. And the target, of course, you're targeting the previous high right there. But if you zoom out a little bit, which is where the higher time frame comes into play, there is potential for you to reach all the way to this previous high right there at $95,000, which would give this a 11.5 to 1 risk to reward ratio. But even though I am calling this trade right now, just understand that I can be wrong. Now, my analyses are very spot on, but when it comes to trading, we need to accept the fact that trading is a game of probabilities. Even if you do everything right, there is still a chance that you lose. To give you an example that might be easier to understand, in poker, some of the best hands that you can possibly have is for example, a pocket ace or pocket kings, or even pocket queens. These are statistically the highest win rate probability hands that you can possibly start with. Meaning, before any of the cards have opened on the flop or the river or anything, just having these cards in hand means that you want to be aggressive, right? The right move here would be to be aggressive. You want to raise, you want to call, you want to play the hand. Doesn't mean that you always win the hand. It just means that if you played that hand 1,000 times, chances are you might win, 60% of the time compared to, on average, let's say, 30% of the time. And that's all you need when it comes to trading. And even your job as a trader is to simply wait, sit on your hands until these high probability opportunities come by, which in this case, it's a broken base double confirmation retracing into the 0.705 with a potential 1 hourly, order flow confirmation. Not yet though. So filming this, there is 25 minutes left until the hourly candle close. And you really want to see an hourly candle close above this, down close candle before you want to say you're confidently in. So whether or not that takes the next hour, or if it takes 2, or if it takes, the entire weekend, because right now we're about to enter the weekends. Actually, I take my words back real quick. Do not enter this trade, ideally, unless you get just really clear confirmation, like, hey, your bullish order flow. We're about to enter into the weekends, which means that there can be really choppy price action and you might get manipulated out. So just something to keep in mind. But overall, like, all of the criteria does add up. And this is the A+ opportunity that we have been waiting for quite literally a week. And so when it shows up, we just take it. And again, this is exactly what you want to see. The way that I drew it out, this is not a coincidence, the way I drew it out. Call it inverse heads and shoulders pattern, whatever. This is essentially just another, mini broken base in a grand scheme broken base. Now, one thing you want to keep in mind though, is that at least on the daily chart, again, I want to remind you that this is the start of a reversal, or rather a potential start of a reversal. Because for the most part, if you take a look at price from the previous all-time high, we are still in bearish order flow. For example, once you break below like previous order blocks, in this case, that's a bearish order block, you break below, you come up, you retest it, and you fail to break above it. So now this validates another bearish order block, price breaks below it, comes back up, fails to break above it, and that validates yet another bearish order block. And right now, I don't know if you guys can notice, but this is one big bearish order block right now that we still have to overcome. So while you are taking along here, just understand that this is by nature counter trend, because the trend overall is still pointing towards the upside. The lower time frames have already started shifting trend, but this could all just be a retracement in the grand scheme of things. For example, price retraces and forms a new low. Right now, you could even just be retracing to form a new low. Do I think that's going to happen? Well, only time will tell. Like, our job as traders is to take a bet when the odds are with us, and ultimately not to judge our wins or losses based on a one trade sample size. Win or lose doesn't really matter. What matters is that over the course of 100 or even 500 or even 1,000 or 10,000 trades, as long as you win more than you lose, that means you have an edge as a trader. And as traders, that was what you want to be focusing on. So many times I see beginners completely get this the other way around, where, they judge their entire success or failure as traders over the last, 5 trades. If they've just lost 5 trades in a row, they get really salty, they get really depressed, and they start doubting their abilities. When in reality, losing streaks are so common. Like, I'm going to pull up this chart for you just to show you how common it is to go through a 5 consecutive losing trades within a 50 trade period, right? This isn't even a 100 trade period. This is 50 trades. So check it out. 5, if you have anything under a 55% win rate, you have a 90, it's pretty much guaranteed that you're going to go through 5 losing trades in a row within a 50 trade period. And some of you watching this may understand this logically, but when it comes time and when you are in the moment, it can be, pretty tough to pull yourself out of that, emotional state and to see it for what it is, that it's a part of the game. So my advice to overcoming really negative emotions when it comes to losing streaks is, don't judge yourself based on like really small sample size. If anything, the minimum that you should be judging yourself is on a 10 trade block period. What that means is that as long as you're performing slightly better over the next block of 10 trades, then that means you are improving as a trader. And over time, these incremental improvements can add up a lot. And ultimately, this is what I try to impart to you guys, aside from talking about price action and talking about technical analysis and giving you guys trade setups. I would also hope to educate you guys just on the mindset of successful and sustainable, most importantly, sustainable trading. Everyone makes money trading. Very few keep it, and even less are able to, stick around for the long term to actually multiply that money. And I hope that you guys are going to be the latter too. And speaking about education, if you want a free trading course delivered straight to your email teaching you about my mindset, as well as my trading methodology, as well as just, common mistakes that you make as a beginner trader and how to fix them, then click the first link in the description box below. But otherwise, have a happy weekend. Subscribe if you want to see more analyses done from the smart money perspective, where we manage to, manipulate, or rather see the manipulation of retail. Subscribe and turn on the bell notification, because I'll be making videos pretty much on the daily on every weekday. Other than that, I'll see you guys in the next one. Bye-bye.